Shares of eBay getting a nice boost this morning, as you can see, after the company beat analysts' expectations, both earnings and revenues. eBay's global active buyers grew 4% this quarter to total 182 million. Devin Wenig is the president and CEO of eBay. Joins me now from the company's headquarters in San Jose. Devin, nice to have you. It's very loud here. Apologize. We got a couple of big IPOs. The marketplace is where people are focused. It's where you're focused in terms of turning it around so that it, once again, showing positive comps in terms of its growth. You're not there yet. You do say it's healthy, but you cite in the conference call short-term suppression of GMV. Why is it short-term, and what exactly is that suppression you're talking about?
The most important thing that we look at is the underlying health of the marketplace. For me, that really comes down to three things, David. It's how many people are shopping with us, how many people are selling with us, and how much inventory is in the marketplace, what's on the shelves, if you will. And all three of those have never been higher. We've seen active buyers consistently grow. We added 2 million last quarter. And we continue to see a growth in business sellers and inventory. If you look in our history, every time those numbers grow, GMV grows. Now, what we're facing right now are a couple of things, and GMV can move up or down in a 90-day period. Right now, we are in the middle of a rollout of internet sales tax, which we know is making an impact, particularly on our U.S. business. We're also seeing the withdrawal of some of the marketing spend that we did last year, which was part of the plan. We said we would do that this year, and we have line of sight to it, and it's explainable. So we're not that concerned about GMV being soft in the short run. What we see is a healthy marketplace, and we know when those metrics grow, GMV follows. It has in every year in our past 24 years.
All right, but if you have that confidence in GMV, why not give 2020 guidance?
Well, we've raised guidance now twice in the last 2 quarters. So we don't give GMV guidance, we give revenue guidance and earnings guidance. And we started the year saying, look, this year was about grow the underlying marketplace metrics, and let's get the 2 real growth priorities, advertising and payments, going. And half of the way in, I'd say I'm pleased but not satisfied. I'd say we've made a lot of progress against those priorities. We still have a long way to go. But it's given us the confidence to raise our forecast in Q1, and we raised it again yesterday. So that's a good start, a good first half.
Now, you referenced the internet sales tax that's going into place in many states across the country, sort of phasing in. You did say on the conference call it's going to get worse, that seemingly headwind, before it gets better. Explain what you mean by that. Why is that going to be the case?
At the beginning of the year, there were no states that had enacted a marketplace collection of sales tax. Now we have 9, and there are 30 that have declared, and 30 will be in place by the end of this year. When a state declares an internet sales tax, we must collect on behalf of the sellers. So we know we have forward view as to how many states will enact that tax and where it will be in place by the end of the year. And it will be 30, and it will cover the majority of our sales in the U.S. And the fourth quarter of this year will be the peak. So I think the impact of internet sales tax will make a bigger impact before it wanes. And it'll wane as we lap out of it next year. But again, I'll just take the opportunity to say, I think it's a bad policy. We've been advocating on behalf of small businesses for years that internet sales tax is a regressive tax on small business, and that is exactly what we're seeing.